So in this video, I want to talk about basically why real estate and why now. So this is kind of an overview video of just real estate investing, the strategies that I personally employ and wish to continue employing, and why I think real estate is a really valuable strategy at this time in history. So the things I want to cover in this video are, number one is why real estate and why now, which has to do with inflation, the money supply on our planet right now. It's going on all over the world in different countries. Number two, I want to share a little bit about myself and my background with real estate investing. Number three, I want to talk about joint ventures, what they are and how they work. Number four, I want to talk about is the strategy that I employ and why I use that strategy. Number five is I want to talk about the components that are required to make a deal work. So when you think about a partnership, you want people with complementary skills or ideas or capabilities really to come together to make a deal work. So what are those different skills and competencies that are required? And then I want to talk about, why get involved in this kind of thing in the first place. So first and foremost, everyone feels it. It's the year 2025 right now. At the time of recording here, it's February, and inflation is something that everyone is feeling. Even people who don't know what inflation even really means can feel that there's some pressure going on in the pricing of everything. So if you really simplify it, which you shouldn't do overall, but in general, the money supply, as they grow the money supply, which is printing money, inflation is the natural consequence of that. Now, there is an issue that's happening all over the world, and I'm going to speak to Canada and the United States, but they're in a position for at a governmental level where printing money seems to be the only real solution to deal with the short-term problems. And because of the bureaucracy and the way our governments work, they don't really think long-term. So one of the core issues as well has to do with the fiat system. So another interesting note that I'm well aware of, my background is in finance and studying economics. A lot of fiat currencies over the centuries, in fact, all of them, eventually become extinct in the sense that they become worthless because they get printed out of value. And it happens on average with fiat currencies every 150 years. So when you think about Canada, our country is about just over 150 years old. We're coming into that time. What will be the next currency? I don't know. That's kind of what these things like cryptocurrencies, specifically Bitcoin, are hedging the bet is on the fact that when fiat becomes valueless, there'll be some new currency, whether that's another fiat, go back to gold, go to Bitcoin, to a Bitcoin standard. That's not determined. What we do know, though, is that they will continue printing money, and so owning dollars is not where you want to be. So the question is for everyone is, where do you actually put your hard-earned money so that you're not basically falling behind or being stolen? Inflation is basically a type of theft. So I'm not going to get into the weeds of all that part of it, but at the end of the day, we need to hedge against inflation. Why real estate, why now, is because real estate has proven and has a long track record of hedging against inflation. And the reason is because, one, rents go up with inflation. The more money they print, the more money in circulation, the higher things like rent become. So rent hedges against that, which protects you. The other part is the actual value of the asset itself, which is the real estate, the property, also goes up in value and hedges against against inflation. So that is the overview of why real estate, why now. But there are a lot of ways to be in real estate, and just like many industries, there are so many different ways, and they're not all created equal. So the type of real estate investing and the strategy that I employ, I'm going to get into in a sec. But first off, my background is I started off my career, I suppose, in university. I studied finance, corporate finance specifically. I thought I was going to go into that. During that journey and while I was in school, I started my own home service company, and I ended up going into the franchising world, which is everything to do with like systems and operations. And I started my own home service company. And one of the first things I bought with the profits from my home service company was my first piece of property, my first condo. A condo that I still own today. That was about 13 years ago. And it has performed over time. It has had ups and downs, but over time I have raised rents and the property has gone up in value and the debt has been paid down. And it's performed. And it's a strategy every few years where I've kept on buying more properties over the years, and it's performed. That's the simple and easy overview of what it is. But my background is in finance, and that's kind of the whole essence of this thing, is to study the numbers and look at the greater macroeconomic position, as well as when you look at an individual piece of real estate, the economics of that particular little piece of real estate. So you almost want to think of each real estate property or whatever as its own little business. But before we buy any specific little business, we want to make sure that the macroeconomics of that city, of that province, of that country are doing well. Now, we obviously don't want to be looking at the country. More importantly, we want to be looking at like the actual cities and the demographics and the actual economics and fundamentals of that city before we get into the nuances of actual property analysis. So that is a little bit about me. So what I've learned after doing all this over the years, I've started my own business. That's one form of investing. I have bought property, so that's real estate. That's the other one of the asset classes for investing. I've got into the details of fundamental analysis and stock investing, and I did that for like 5 or 6 years, where I was really involved with fundamentals, analyzing stocks, building a portfolio of stocks. And then in the more recent years, I've gotten involved with just straight up Bitcoin investing, which is, again, there's a whole other thing I could say about Bitcoin and the thesis of that asset, which I won't get into, but I have a small position of holdings in that. But out of all of them, real estate is the most interesting and it's the one I understand. It's the simplest model out of all of them. It's the easiest to analyze, and it's the most stable out of all of them as well. And that's why moving forward, the dominant position in my actual net worth is real estate. So why I'm making this video is, first of all, to talk about this and educate, but also as I grow in my own real estate investing life, the size of deals that I want to be getting into, I want to be bringing in partners. So what is a joint venture partner? And I want to speak to that. Joint venture partnership is kind of like it's like a business partner who comes in and offers some quality. So when you think about a real estate deal or a little real estate business, whether that's a 20-plex or, a single family house or one condo, there are some ingredients that are required to make a deal work. Especially when you're dealing with smaller stuff, often people start out by themselves and they bring all the things themselves to the table. So those things are, one, you traditionally and typically, unless it's some crazy economic boom, you need down payment money. So usually your traditional real estate investment is at least a 20%, often 25% down payment. Someone has to have that cash. That's one component of what a partner can bring to the table. Number two, somebody has to be able to qualify for the mortgage, or the property itself has to be able to qualify for the mortgage independent of the owners or the shareholders. And number three, somebody has to have the skills and expertise to find deals, negotiate them, manage them for profit and cash flow, and then exit the deals or renegotiate the deals as you go over the term. So basically there has to be someone directing the whole deal, or kind of like a little mini CEO of the deal. Often the way joint ventures are structured is someone comes in as the money partner or the majority money partner, and then the other partner is the managing person. So I'm kind of at the place where I'm now looking for money partners to join deals. And typically how it would work and the way I structure it is that when you make an investment, say it's with me or whoever, you're putting up a certain down payment. So say it's $100,000 that you're putting into a deal. The deal has a certain profit, which I'm going to go into the details of how profit is broken down or the return is broken down. But when you buy into the deal, over the term, there's going to be like a percentage return, whether let's say it's an 18% return throughout the year. And then when the closing of the deal or on an annual basis, what happens is the first things first is the investor gets their initial capital back. And then the profits beyond the down payment or the initial capital required to do the deal gets divided amongst the joint venture partners based on their contributions. So it's a little bit harder to explain it and really visualize it as I'm just sharing it on a video, but there are lots of like templates that you can actually see these breakdowns and how it works. What's important to know is that's kind of the three main things that are required to make any of these deals work, right? There needs to be money, there needs to be someone who can qualify for the debt component, and then there needs to be someone who's actually skilled and knows what they're doing, because there are a lot of pitfalls in real estate investing, and there's a lot of bad investing, and there's a lot of speculative investing, which is not what we're doing either here. I am a positive cash flow investor that buys long-term hold real estate. Sometimes I'll renovate and increase the rents as well. But the name of the game, I guess I can step into the strategy, but let me just have a quick look here. What else I wanted to cover here? How does the strategy of investing work? So I want to start off by talking about the strategy that I employ and why I employ it. But when you think about your regular real estate deal, that's a positive cash flow, which just means that the business makes a profit after all expenses and debt repayments. But if that's the case, there's three ways that a business in real estate makes money, or a property. Number one is after paying all of the operating expenses, so things like taxes, insurance, if it's a condo fees, property management, I think I said insurance, but all those kinds of things, once those are all paid off, there's an operating profit. And then you still have to pay off the debt. If all of that is done and factored in, you get something called profit or cash flow. That is one of the ways you get a return on investment from real estate. The second way you get a return on investment in real estate is that debt payment. Part of the debt payment is interest and part of it is principal. The principal is the loan getting paid back. That is factored in as a return on investment. So the equity paydown is what they call that. That's the second way you make a return in real estate. And then the third way you make money in real estate is the property value going up. With a lot of especially larger deals in real estate, property value going up is not quite the same as like single family homes, which is based on comparables of real estate. Like this property sold for this down the street, so this one will sell about for the same. In rental real estate, it's about the rent. So if you increase the rents over time through either just time on its own or renovating, as you increase rents, the value of the property goes up. So appreciation is the third way you make money in real estate. When you add up the return of these three, you get your total return on investment for a piece of real estate. And if it's a joint venture partnership, that total return would get divided amongst the joint venture partners based on whatever has been agreed upon. So those are the ways, that's the overall strategy. So when you do long-term buy and hold real estate, you're looking for a cash flow positive piece of real estate, which you can do all that analysis before you ever close on a deal, right? That should all be totally transparent and established before you ever close the deal. And that's where the due diligence process comes in. Now, I want to speak to leverage. So the issue, coming back to like even what we talked about at the start of this video, what our whole world has gotten itself into is an over-leveraged position. That is the reason why we're printing money in the first place at a governmental level and an economically global level, is that we're printing money because there is so much debt. And in order to service the debt, we actually keep printing and devaluing the dollars more. And there's a whole cycle behind that. Too much for this video for me to get into, but I'm actually going to put a link that explains inflation. This is a video from Tom Bilyeu from Impact Theory, and it's literally a really solid description of inflation where he breaks the whole thing down. So I'll put a link below so you can learn about inflation, which is why we're doing all of this in the first place, right? But what I do still need to speak to is why we need to be leveraged in real estate and what is healthy leverage. So I'm going to use an example. If you have a $100,000 piece of property and that property, let's say the economics in that city, the property values go up 5%, and you have purchased that property 100% in cash, that means you made a 5% return on your money. So if you put $100,000 down and the property cost $100,000, it goes up 5%. So now it's worth 105. You've made $5,000 divided by the down payment. This is really simplified, but you made 5%. When you use leverage, though, you get someone else, that being the bank, typically, or a credit union, to offer a mortgage or a loan. And that loan, let's say it's 80-20. So 80% is the bank, and you put $20,000 down. So you've actually only invested $20,000 of your own initial investment. The rest came from a third party. Then once you have the property, you rent it, and the tenants pay off the loan. Now, if that property, this is the appreciation side of the return on investment, that third component. If the property goes up 5%, 5,000 divided by the 20%, which is 20,000, is actually now changed your actual return on investment for the appreciation component. Instead of 5% return, it has now just become 25%, because $5,000 divided by 20,000 is 25%. Plus you've got the cash flow. Let's call that another 4 or 5%. Now you're at 30%. Plus you have the mortgage being paid down, which is traditionally another 7%. So now you're at 37% return on investment between the three different pieces. So if you have a joint venture partnership that is, let's say 40-60 or 50-50, I'll say 50-50 for simplicity, each partner made half of 37%, so like 18%, 17%, or 18% return on investment. Also, if anything ever happens in this particular deal, there's 37% to work with, to deal with whatever comes up within the deal structure. So that is an overview, a very simplified overview of why real estate investing. So even with the absurd inflation, which let's just say it's between 7 to 12%, or maybe even more, and nobody knows for sure the real number, but they call that the hurdle rate in business, the inflation rate that you need to overcome just to preserve your capital, right? If the money is being devalued by 10% every year, then you need to make a 10% return just to have the same purchasing power by the end of the year, which is insane. And it forces your average person in the world to have to think like an investor, which is not the case. Most people don't think like an investor. So where do I want to go with that? We need to be investing. That's really the challenge that this video is seeking to address, that what I'm trying to address for your average entrepreneur, for your average person. Part of my goal in life is to help people to become more free, to feel more free. And we can't do that unless we have our investment life and our financials organized. Part of freedom in life has to do with this ability to create abundance at a material level. So not knowing how this stuff works can be a challenge to your personal and spiritual freedom, right? Like, that's what this is about. So when you find really healthy real estate deals, and they're always out there, they're in the good times and the bad times, there's a skill to finding them. And that's what I'm learning to become very good at, and what I wish to continue developing as an expert in the real estate field. But when you can find these 35% return types of deals, whether it's a joint venture or done personally, you can beat the hurdle rate and build wealth at the same time. There's a lot of difficulty of finding investments right now that can beat the hurdle rate. The stock market has proven to be good over has had a past in the more recent path that has done quite well. But from my outlook and from my fundamental analysis, the stock market is in a very overvalued and difficult position, that to beat the hurdle rate without having to speculate is probably going to be very difficult for investors. So what are your other options? I think building businesses is always a good option, but not everyone is an entrepreneur. Passively, real estate is probably your best, most secure way to do this. Whether you learn to do this and become an expert yourself or work with an expert, real estate is a hedge against the inflation that is rampant, and it's going to continue being rampant because they're not going to stop printing, in my opinion. The other one would be things like, why is crypto such a boom right now? It's for this very reason, right? It's not only a hedge, but it beats the inflation rate or the hurdle rate by a tremendous amount historically over the last decade. So people are betting on it. I don't understand the fundamentals of Bitcoin the way I couldn't explain the fundamentals because it doesn't quite have fundamentals in the same way that I just said with real estate just now. It's a different type of bet, which I'm not going to get into in this video. But this is the essence of what we're dealing with as a culture, as like I said, it's the year 2025 in Canada, and I live in Canada right now, and this is the issue that people are facing. They're hard-earned money, which you can't just save it anymore. It's been a while since you could do that, but you can't just park it and save it because it is literally being dissolved away. So you think about going to work, and regardless of what kind of work you do, even if you love your work, you're still going to work to earn this thing called fiat currency. And that very thing is just withering away, which is an issue. Historically, it used to preserve its value a lot better, but because of the nature of what we've done, this really started, again, I'm not going to go into the weeds of this, but it started back in 1971, I believe, when Nixon took us off the gold standard, and basically the currency is not backed by anything. I think it can be printed freely now. So we need to own assets, and that's, if I simplify the whole thing, assets are real things that people need, right? Whether that's a home, people need homes, right? That's what this is, real estate. And people need stuff, like just in general. Owning stuff is going to do better than owning fiat currency. So you have to become educated in what stuff to own. And what I'm telling you is real estate is one of those stuffs to own. But you got to buy it right, and you got to buy profitable pieces of real estate that make a cash flow. And that in itself is the skill of the real estate investor, is finding those types of properties that are positive cash flow or have a net profit in markets that are also growing. And what I mean by growing is that the population is growing, and traditionally what causes a population to grow is there's a strong economy, or jobs are growing. That's usually the top level factor at a fundamental level for how you assess a real estate market. Are there jobs being created, either by government or by entrepreneurs, right? So that's when you get into like the political climate, and like, is the government creating an environment where entrepreneurs want to be there because they're looked on favorably, where they can create jobs, which drives people there, which causes real estate to go up in value. And then once you find those markets, you need to find individually profitable pieces of real estate to buy that are cash flow positive. That is the overview summary of what I'm doing, what I do, and really what I'll be looking for partners who want to join me in this journey, because to date, I've done all my deals. So all of my deals are long-term hold, cash flow positive rental real estate deals in Canada. That's what it is. Sometimes I renovate them, sometimes I don't if I don't need to. And you just hold them, and they hedge against inflation, they pay down your debt, they make positive cash flow, and they go up in value. That's the strategy, and it has been working. But some of the deals I wish to do as I grow as an investor is the multifamily deals, like the larger deals, which is kind of like 20 plus unit kind of deals. And I'm going to need partners on this journey with me. So if you're interested in this kind of thing, there's a form. This video is on my website. It's going to be on probably YouTube, website, a few different places, but you can click into, there'll be a form somewhere you can click into if you want to learn more and just have a chat with me. And the first step I do with people is ultimately understand your investment horizon and your needs and your risk tolerance and what you're looking for. And if you're wanting to be, like, I have a whole questionnaire and stuff to looking for fit of partners for this type of investing. That's it for this video. I hope you learned something. And yeah, and if you're interested, I hope to hear from you. So that's it for this video.